And welcome to the HR European Market Neutral monthly video update for July 2022. So July was a welcome bounce month in markets. Most of us very happy to see markets bouncing for the first time in a while. Very much a sort of bit of relief bounce and maybe a bit of a macro bounce. Relief perhaps on the unblocking of the grain situation in Ukraine. Not a done deal, but maybe going in the right direction. And in the macro front, perhaps those slightly softer comments from the US Fed kind of helped global markets, global equities believe that there was kind of light at the end of the tunnel. And given how much things have been beaten up, the scale of the rally was pretty significant. So first of all, big rally. Secondly, we made a little bit of money. So that's a good thing. Given that we protected capital pretty well this year, I always think when you've got a transition month from a period where it's been, the market's been under pressure and we've done well to protect and maybe make a little bit of money. To make a little bit of money in a big rally month is probably also a good sign. So, very difficult markets all year, but trying to get the combination of those markets when it looks like it's all over and we can make some money, and those markets where it's all back on and we can make a bit of money. So overall, I think we can be reasonably happy with that small positive result, and let's hope we can continue those trends. In terms of what worked for us, clearly a long book led, short book was a pain, no big surprise there. And I think in the long book, particularly in Europe, it was growers like ASML, Schneider, things that have been really pretty aggressively hit in the first half that bounced the most. Indeed, people really went for growers and good places to hide type bouncers. It was a bit of a switch back to growth and tech rather than saying, right, we'll buy deep value that's also been hit hard. So people didn't go for that. The rally wasn't long enough for people to look down and say, actually, value's okay too. Maybe with the exception of Stellantis, which still looks really cheap and did bounce a bit, the auto player. In the UK, we did well out of a couple of financials, such as IG Group and Man Group, who rode that rally quite nicely. I think one of the things you always say is if you don't have enough stocks in a rally, some financials can help you out like that, so that was good news. The UK story was probably more negatively impacted on the short book, where we had Frasers in particular. Frasers UK Retail Group owns Sports Direct, House of Fraser, Flannels, which is sort of higher end retail. Frasers was a company that I think was probably priced for a much worse outturn than they announced. They announced quite a positive overview. It's a tough market, but they were doing okay type message. And that was enough to really get the shares going pretty hard. Shares that are probably quite unloved and a bit shorted. So a little bit of a squeeze there, perhaps, that didn't really work out in our favour. Took a bit away, but didn't take enough away to really damage the UK side of the book. So overall, small positive, small contribution. I think we can look into the rest of the month. I mean, we're going to have the rest of the year, rather. We're going to have this challenge with companies saying it's okay now. We don't know what the outlook's like. And I think if you look at it, most people are focusing on the outlook, not worrying about how well companies have done year to date, which is probably generally a bit better than people thought. So as we work our way into the second half of the year, through the rest of Q3 and into Q4, it'll be a question of whether those companies can hold on to those gains they've made in the first half. Structurally, operationally, most of their share prices are pretty underwater. So if they can come into Q4 and say, yeah, it's okay, we're going to deliver on the full year, I think we could see some good share price rallies. And notwithstanding that, as usual, all the usual macro and geopolitical caveats we've had this year could obviously derail us again. So taking a cautious approach, not suddenly getting bullish just because markets have gone up a bit last month, remaining very balanced as you would expect. Thank you again for your support, and I look forward to updating you again at the beginning of September.